In its last meeting held on July 11, the GST Council had decided to levy a uniform 28% tax on the full face value for online gaming, casinos, and horse racing. It threw a shadow of uncertainty on the future of e-gaming in India. Industry bodies were cautioning against mass job loss, imminent shutdowns of most medium and small gaming companies, and a setback for the industry overall. In its 51st meeting on Wednesday, August 3, the Council, however, softened its stance and brought in some relief for the nascent industry. While the government will continue levying 28% GST on the face value, the tax will now be levied only on the initial amount paid on the game and not on the total value of each bet placed. Now, GST would not be applicable on the winnings, which could be used to place further bets.
Gaming companies pay tax on something called GGR. GGR is nothing but gross gaming revenue, which is the revenue the platform earns from fees like platform fees, service, and other infrastructure fees that it charges the players when they deposit money with them. So on a deposit of 100, say 10 rupees may be taken as GGR. GST Council, the 50th Council, wanted to tax not just the GGR, but the entire face value of the bet, which is basically the entire 100 rupees, which is not just the gross gaming revenue, but what we call as a contest entry fee or CEA. That luckily has been revised now to say tax be not on the contest entry form, but on one-time levy of the deposit made by the user with the gaming company. So any winnings coming out of that, any subsequent use of this money for playing further games will not be taxable.
The GST Council will review the implementation of the 28% tax after 6 months. The Council meeting also recommended amendments in the CGST Act 2017 and IGST Act 2017 and Schedule 3 of the CGST Act 2017 to simplify the taxation of supplies in casinos, horse racing, and online gaming. The Council also recommended inserting a specific provision in the IGST Act 2017 to provide for liability to pay GST on the supply of online money gaming by a supplier who is based outside the country to a person in India. Levying GST on international gaming platforms is likely to impact investors' sentiments and future fundraising efforts. So, how will the changes affect the e-gaming industry?
The GST Council last meeting happened prior to this. The proposal was to apply valuation on the contest entry. So that would mean repetitive taxation, and that I think has been addressed. We are grateful for that. In the earlier, if on the contest entry, the upside in taxation would have been close to about 1100%. However, with the introduction or with the decision to move it to deposit level, the percentage upside from current levels will be about 400%. It is a lot to absorb. The long tail of MSMEs and startups would unfortunately and inadvertently run out of business.
With an increased tax liability of 400 to 500%, what strategies should the industry follow in the near future?
The lesser interest in the sector, the investment prospect of the sector, and the excessive compliance from a regulatory standpoint would be something which the companies have to re-strategize about and think through as to how they want to cope with it.
And finally, how have the tax implications changed for the gamers themselves?
As a gamer, earlier, I would contribute 100 rupees. On a 10 rupees, there would be a GST of 1.8 rupees, which would be there. The remaining amount, say 88 rupees, would get put into a pool. And I had a high chance of being able to get distribution of a significantly higher amount than what I have contributed. But with this, what will happen is when I put my money into a wallet in the gaming company, I'll have to immediately pay a 28% GST on this amount. So plus the platform fee, which could be 5% or 10% will be there. So immediately from an 88 rupee amount, you're probably looking at closer to 68 rupees or 65 rupees as the amount that will be there in the pool. And the skill required to be able to earn back the money that you invest is probably going to be higher. And of course, on that winnings, whatever you make, there's a TDS of 30%.
While the revised GST rule will offer some respite to the e-gaming companies, the new regulation will weather the prospects of the e-gaming industry. This might also lead to dwindling interests among both gamers and prospective investors.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.